Hello traders and welcome to another video review. Today is Thursday, July 30th, 2026. So let's take a look at the economic calendar for today. Fed interest rate decision has been made yesterday, and we knew that the new Fed chairperson has been speaking about some kind of a shocks, and that's the major reason why there is a quite different situation here on the overall market. Nevertheless, that was yesterday. What do we have today? German GDP scheduled for release at 10 o'clock. Market participants expect the GDP in Germany to deteriorate from 0.3 to 0.1%. Bank of England interest rate decision is scheduled for release at 1 p.m. The market participants expect the Bank of England to hold the interest rate at 3.75. German CPI data are scheduled for release at 2 o'clock. Core price index from the USA is scheduled for release at 2:30 together with the US GDP and initial jobless claims. So as you can see, plenty of highly important data releases with high volatility situations around this time on the market. So please stay focused, stay vigilant. And now we are going to see some kind of a charts. We start with euro dollar, obviously. Euro dollar 4-hour time frame chart is showing us a big breakout higher towards the swing high from the July 15, 2026. 1.1483 has been tested and rejected. So basically, euro dollar after the Fed interest rate decision is next day after the Fed interest rate decision is trading very close to the 1.1475. Now it's pulling back from the extremely overbought conditions. Nevertheless, it still seems like the market still doesn't know where it wants to go. Nevertheless, any kind of a change of the rhetoric in the Fed is showing us the big movement to the upside that the market participants should be ready for. Now the situation here looks very interesting. Let me just zoom out a little bit just yet. As you can see, those black levels, horizontal levels, are the major levels on the weekly time frame chart, major technical support levels. I'm going to extend my channel here, the big yellow channel that is the descending channel. As you can see, the market keeps moving inside of this descending channel. As long as we keep moving inside of this channel, the outlook remains bearish. British pound ahead of the interest rate decision breaks out of the channel. So right now we are going to remove this channel, and the situation here gets a little bit more interesting. So we got this technical support 1.33. Now those area here, those three levels, especially those two that are very close to each other, are obviously the supply zone. So what I'm going to do is I'm going to mark this supply zone, because breakout above this supply zone, it will be crucial for the further situation on the cable. So this is the zone I'm talking about, right? This is the very narrow supply zone, and there is one more technical resistance, 1.3360. Now momentum is positive 54 points ahead of the interest rate decision. Can we place some sort of that channel here, because we are out of this channel for good? Let me just check if we can place some parallel channel here. Well, we will place the new parallel channel here, and that's about it. I think to the newest data we should do this. So as you can see, that situation here is completely fresh, completely new. We have a different channel, and this is the descending channel, as you can see. So we are waiting for the market to show us what is going on. US dollar versus the Japanese yen doesn't react on the Fed interest rate decision, keeps trading inside of this range. Projected target are still available for the bulls. Nevertheless, there's lack of the momentum. As you can see, we drop below the level of 50. We are balancing around this level these days, little bit up, little bit down. Not much is going on here, so we are waiting for the breakout. In the background there is strong uptrend, so please pay attention to the US dollar versus the Japanese yen. Gold market doesn't do anything after the interest rate decision. A little bit of a jump to the upside. Nevertheless, we are still inside of the range. This market is range defined, and we can't do much about it. If we place, for example, let's place some parallel channels. So we got this high here, right? We got this high, and we are going to be extremely picky in this situation here. Let me just get rid of the anchor. So that's the situation here, and this will be our channel, and but the borders will be black. So that's the situation here with the channel that we have. Of course, it's not finished. What we can do is that we can leave this channel here because it used to work perfectly. Look at this, and now that's the breakout. That's the test of the breakout, and we are moving back inside, back out away of the channel, but we are going to extend this channel for a bigger situation here, and I think that this is the correct channel these days. Again, descending channel on the gold is telling us that the general trend on the gold is still down. S&P 500, we've been witnessing this situation here for quite some time, at least for a few days, when the market has been very interested in a battle between bulls and bears around the level of 7,440, 7,000, let's say 375. Now we have a definitely some sort of a breakout to the downside after the Fed gave us the clue about this situation, and now that area here is definitely technical resistance. We are changing this colors of this levels for red, obviously, and we are now away from this. We are trading away from this zone, so this is very strong. Now it is a supply zone. Bulls lost the battle. Bulls lost the battle. Bears are in charge of the market. They are pushing the market lower. We bounced a little bit from the border, lower channel line. So that's the border. Nevertheless, please look at this. That's the technical support that we bounce from 7,290. Right, so we are, any breakout out of the channel is very bearish. Next target 7,224. Bearish situation on the S&P 500. Crude oil keeps moving higher. As I said, as we hit the extremely oversold conditions and almost hit the 61% of the Fibonacci retracement of this swing to the upside, now there is a time to cover the gap, to fill this gap. The blue area here, local highs 87.79, and then decision time. Either we continue lower and upward movement will be rejected, or we break up, we fill the gap and break higher. That situation, swing high at 93.48 is next. So that's the crude oil, and now the Bitcoin. The Bitcoin doesn't do much. The Bitcoin doesn't care about the Fed that much as it used to these days. So maybe there's something else going on here about the situation on the markets, and I think we should take a look at something else here. We should take a look at the NASDAQ. Let me just take a look on NDX. So that's the NASDAQ, that's the 4-hour time frame chart, and if we take a look at the daily, you can clearly see first bearish divergence here on the NASDAQ, and then some sort of the distribution, let's say, and movement to the downside. So basically that situation here is not in favor of a Bitcoin whatsoever. Major technical support is obvious. We can all see this major technical support, and there it is. That's the major technical support. So we need to bounce from the 26,130 in order to confirm the uptrend is still possible. The other thing that we can see here on this market is obviously the Fibonacci retracement. So let me just anchor the levels. We traced already 38%, we are coming towards the 50% and then 61, and that will be very interesting area here. Let me just mark it for you guys, because we didn't actually do much of the analysis of the NASDAQ. Let me just focus for a little bit. There you go. This is it, and that's the black area. Maybe the black is not really what I want. Maybe this one. Okay, so you know that this is something completely different. There you go. So that's the area between 50 and 61% Fibonacci, right? And in the middle of this, there's crucial key technical support level. So mark this on your charts, because it might be interesting and useful in the nearest future. So that's about it. That's about today's analysis. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.